Hey everyone, welcome back to Corporate Decoder. Today, MassMutual Premier Funds just filed their N-CSR certified shareholder report for the semi-annual period ending March 2026, and I am digging into the fund financials to see what is really going on. Quick note, this is not financial advice, just my take on public filings for educational purposes. So, what are the key financial statistics for these funds right now, and what do they say about their current health? Let's start with the big picture for the MML Barings Short Duration Bond Fund. The total net assets are sitting at $126.9 million as of the 31st of March, 2026. This gives us a snapshot of the total value held within the fund. The portfolio turnover rate, which tells us how often the fund buys and sells its investments, is at 37%. A moderate turnover rate can indicate a strategy that is neither extremely active nor completely passive. When we look at how the fund is invested, corporate debt makes up a significant portion at 50.8%, followed by non-U.S. government agency obligations at 30.1%. This suggests a strategy that balances risk between corporate bonds and potentially less volatile government agency debt from outside the U.S. Commercial paper also represents a notable 16.4%, indicating a portion of the fund is in short-term debt instruments. Diving deeper into the MML Barings Short Duration Bond Funds portfolio, we see that bonds and notes make up a substantial 81.4% of the investments. Within the corporate debt category, which is 51% of the fund, we're seeing a variety of issuers. For example, there is a holding in Ford Motor Credit Company LLC with a principal amount of $430,000 and a value of $427,756. There is also General Motors Financial Company Inc. with a principal amount of $366,000 and a value of $376,684. These auto manufacturer bonds represent a significant chunk of the corporate debt holdings. Looking at the non-U.S. government agency obligations, which make up 71% of the fund, there is a significant allocation to automobile asset backed securities. Specifically, we see holdings like Alloya Auto Receivables Trust, Series 2025建议 A-Class I FRI, with a principal amount of $86,127 and a value of $88,286. This section of the portfolio is quite complex, involving securitized auto loans. It is important to understand that asset-backed securities carry their own set of risks related to the underlying assets. For the MML Barings Inflation Protected and Income Fund, the total net assets are $204.2 million. Their investment strategy leans heavily towards non-U.S. government agency obligations at 53.2%, but U.S. Treasury obligations are also a significant component at 22.4%. This includes us Treasury bonds and notes, showing a clear diversification across different types of government debt. Their portfolio characteristics also indicate a substantial holding in commercial paper, about 16%, and corporate debt at 4.7%. Their portfolio turnover rate is 48%, suggesting a more active management approach compared to the short duration bond fund. Digging into the MML Barings Inflation Protected and Income Funds US Treasury holdings, we see a large value in US Treasury bonds and notes. For instance, there is a holding in US Treasury inflation. Index bonds with a principal amount of $199,8880 and a value of $187,9280, highlighting the fund's focus on inflation protection. This shows a clear strategy to hedge against rising inflation. Now, let's switch gears to the MML Barings Core Bond Fund. This fund has significantly larger total net assets at $846.5 million. Its portfolio composition is more diversified across different types of debt. Corporate debt is its largest holding at 38.3%, followed by non-U.S. government agency obligations at 24.3%, and US government agency obligations and instrumentalities at 22%. The portfolio turnover rate here is 57%, indicating a slightly more active strategy than the inflation-protected fund. In the MML Barings Core Bond Fund's corporate debt, which is 38.3% of the investments, we see a mix of industries. For example, there is a substantial holding in Apple Inc. with a principal amount of $10 million and a value of $9.9 million. This is a classic example of a large corporate bond holding within a core bond strategy, aiming for stability and income. The fund's significant allocation to US government agency obligations and instrumentalities at 22% includes holdings like Federal Home Loan Mortgage Corp, pass-through securities. This suggests a strategy rooted in more conservative government. backed debt to provide a stable foundation for the portfolio. Moving on to the MML Barings Diversified Bond Fund. This fund has total net assets of $69 million. Its investment strategy is quite different, with corporate debt being the largest component at 56.5%, followed by non-US government agency obligations at 27%. Notably, its portfolio turnover rate is much higher at 107%. This indicates a more dynamic approach, potentially involving more frequent buying and selling of securities to capitalize on market opportunities. Within the corporate debt of the MML Barings Diversified Bond Fund, which is a dominant 56.5%, we see holdings in companies like AT&T Inc. and Plains All American Pipeline LP. This suggests a strategy that leans into corporate credit, potentially seeking higher yields, but also accepting higher risk compared to the core bond fund. Looking at the geographical allocation of the MML Barings Diversified Bond Fund, the United States holds the largest portion at 71.6%. This is followed by Cayman Islands at 8.4%, United Kingdom at 4.1%, and then smaller allocations to Bermuda, Canada, Ireland, Panama, Switzerland, Finland, and Mexico. This diversified geographical exposure aims to reduce country-specific risks. Now, let's talk about the MML Barings High Yield Fund. This fund has total net assets of $509.1 million. Its investment strategy is heavily concentrated in corporate debt, which makes up a massive 83.7% of its holdings. The portfolio turnover rate is 51%. Which is moderate but higher than the bond funds, fitting for a high-yield strategy that might involve more credit analysis and risk assessment. The dominance of corporate debt at 83.7% in the MML Barings High Yield Fund is characteristic of this strategy. This means the fund is primarily investing in bonds that are considered to have a higher risk of default, but also offer higher potential returns. This is where investors look for yield, but also where they need to be aware of heightened credit risk. Lastly, let's look at the MassMutual Small Cap Opportunities Fund, with total net assets of $511.4 million. This fund has a portfolio turnover rate of 30%, suggesting a more selective approach to small cap investing. The largest holdings are in specific companies like Impro Inc. at 2.1% and American Healthcare REIT Inc. At 1.8%, the top sectors are financials at 18.6%, industrials at 18%, and information technology at 15.4%. This indicates a strategy focused on growth potential across various sectors within the small cap universe. Focusing on the largest holdings in the MassMutual Small Cap Opportunities Fund, Impro Inc. represents 2.1% of the total investments. This is a specific company pick, perhaps indicating a belief in its unique growth prospects within the industrial sector. The sector breakdown for the MassMutual Small Cap Opportunities Fund shows a strong emphasis on financials at 18.6% and industrials at 18%. This is often where smaller growing companies are found, particularly in areas related to business services, manufacturing, and infrastructure. After reviewing these filings, it is clear that these funds offer distinct strategies for investors. The short duration bond fund and the inflation protected and income fund appear to prioritize stability and hedging against inflation. The core bond fund offers a diversified approach to the broader bond market. While the diversified bond fund and high yield fund take on more risk for potentially higher returns, the small cap opportunities fund, as expected, is focused on growth through smaller companies across various sectors. The financials show these funds are substantial operations with billions in net assets, managed by MML advisors and often utilizing sub-advisors like Barings and Invesco advisors. I am watching closely how these portfolios manage interest rate, risk and credit risk, especially given the current economic outlook. The use of derivatives across several of these funds, like futures, contracts, and swap agreements, is quite extensive, especially in the bond funds. This suggests an active approach to managing market exposures. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded, remember to like this video, comment your thoughts, and subscribe for more. The Discord link is in the description.